This is Scott Becker with the Becker Private Equity Podcast. Today's discussion, and before I start the discussion, feel free to anytime to text me 773-766-5322 with any ideas that you have. Today's discussion is hard landing versus soft landing. So this is the discussion about the U.S. economy and the potential for recession. And I think increasingly we're coming to the conclusion that the combination of deficits in debt and inflation in debt and higher interest rates and the amount of companies that have excessive debt and are having to lay people off to sort of make cash flow work and the amount of families that have excessive credit card debt is going to make it hard to have us have a soft landing in the recession. At best, I think a mildly hard recession. You've got the situation now where you've almost got a game of chicken going on between the White House and Congress versus the Fed. And the game of chicken is as follows. The White House has to deficit spend to keep growth going. That leads to inflation. The Fed needs to raise rates to avoid too much inflation. That leads to potential recession. And you've got them in this very difficult, challenging sort of balancing act between the two, where the two seem to be somewhat on opposite pages and don't really want to connect and communicate over it. So you've got Chairman Powell saying we're going to raise rates a little bit more than to stay higher longer. And this is what he has to do to fight inflation. Inflation is partly caused by government spending, but you do have a situation where consumers are piled on with $1 trillion plus in debt. And then you've also got the situation where where companies are highly leveraged, and they might have been fine. And real estate is highly leveraged. And this might have been fine to be highly leveraged at 6 to 7% interest rates. It's not fine to be highly leveraged at the 20% that credit cards cost or the 12% that sort of mezz debt and other debt cost behind private equity funds. So what we're seeing is harder and harder to see a soft landing. Yesterday, a great piece by Fed Chairman Powell, where he says, and there's an article that says the Fed's plausible outcome leaves little margin for investors. What essentially Powell said is that the chances that the U.S. will avoid a recession this cycle essentially is it's possible. And he also says a soft landing is not the Fed's baseline expectation. It's a plausible outcome. And I think that gives more perception that we're likely not to have that soft a landing. And what does a soft landing versus a hard landing look like? A little concerned to see what a hard landing looks like. Thank you for listening to the Becker Private Equity Podcast. And again, we think it's unlikely you get anything better than a mildly hard landing unless the Fed keeps on deficit spending, which leads to its own problems. Well, they'll keep on deficit spending, but it's a matter of how much. Thank you for listening to the Becker Private Equity Podcast.